Geo Finance speaking. This is your source for data-driven precious metals analysis. One channel, one mission, cut through the noise and show you what's actually happening in markets while everyone else is watching headlines. Drop Geo in the comments if you're paying attention. There are countless channels copying formats trying to sell you courses and signals. We will never sell you anything. Protect yourself. Iranian state media officially confirmed Supreme Leader Ali Khamenei has been killed following U.S.-Israeli airstrikes. The Supreme Leader has reached martyrdom per state broadcaster. Former Iranian President Mahmoud Ahmadinejad also killed in a separate strike, according to Iranian media and Fox News. This is not speculation. This is official confirmation. Two of Iran's most powerful figures gone in coordinated strikes. Many thought news of Khamenei's death might de-escalate tensions. The opposite happened. Iran launched 165 ballistic missiles, 2 cruise missiles, 541 drones since yesterday. 152 ballistic missiles intercepted, 56 drones destroyed, but 35 drones hit land. 21 struck civilian targets just this morning. The UAE has been turned into a war zone. 3 people killed, 58 injured from various countries, moderate damage to civilian homes and property. Iran then targeted the U.S. aircraft carrier Abraham Lincoln with 4 ballistic missiles. Iranian Revolutionary Guards confirmed the strike via state media. Whether those missiles connected or were intercepted, we will find out. Iran says it will not bow to its enemies and will continue responding with strength. No red lines anymore. Now here is where physical markets separated from reality while everyone else is watching missiles. China's Dashang Bank just issued a notice. If there is a big deviation in price leading to depletion of accumulated gold liquidity, trading will be closed. A huge amount of yuan savings are waiting for market open Monday. The dark market touched $6,000. Not when, $6,000 per ounce for gold. PXG, tokenized physical gold on crypto rails, hit $5,600 yesterday, currently trading at $5,400. That is 124 above Friday's spot, close of 5,278. Crypto never sleeps. So the premium runs wild while traditional markets stay closed. According to a Chinese commodities trading advisor, China's Shenzhen physical silver buyback price premium between small distributors shot up almost 20 per troy ounce equivalent. This makes the China Shenzhen physical silver buyback price north of $120 per ounce. Most small Chinese silver distributors are not selling their physical silver in fear of lack of supply. Let me break down the weekend pricing across markets because this is where you see the complete decoupling. IG weekend spot silver trading near $100, hyperliquid showing $96. Shanghai spot 105, Shanghai futures $108. Western spot closed Friday $93. That is a $7 weekend premium on IG, $12 premium on Shanghai spot, $15 premium on Shanghai futures, and physical markets in Shenzhen paying $120. That is a $27 premium in China physical markets over Western paper. When physical and paper diverge by 30%, one of them is lying. And it is not the physical market. 3 assets matter now: gold, monetary reset hedge; silver, industrial shortage play; oil, energy cannot be printed. Everything else trades on sentiment. These 3 trade on necessity, and all 3 are spiking together while the world's most critical energy choke point functionally shuts down. The Strait of Hormuz, where roughly 20% of global seaborne oil trade flows, is effectively closing. Not technically shut, but functionally frozen through insurance. Ships traveling through Hormuz purchase war risk insurance protecting shipping companies from attack costs. If insurers refuse coverage and ships stop sailing, oil flows effectively stop. Even if the waterway technically remains open, 2 vessels have been attacked. A Palau-flagged oil and chemical tanker named Skylight near Keshem at the entrance. 4 crew injured, 20 evacuated. Then a second ship named MKD Vion. 2 vessels now on fire near the Strait of Hormuz. Insurance costs for a $100 million oil tanker jumped from roughly $250,000 to $375,000 per voyage. 150 tankers have dropped anchor in open waters. oil and LNG carriers refusing to move. Sitting off the coasts of major Persian Gulf oil producers, Maersk suspended all Strait of Hormuz transits. Brent oil prices trading up 8% to 10%, around $80 per barrel. Weekend prices holding gains, not giving them back. This is a violent negative supply shock. Roughly 20 million barrels per day of oil frozen, plus 100% of Qatar's world-leading LNG exports suddenly blocked. But Iran's strategy goes beyond just Hormuz. This is calculated maritime assault targeting key ports across the Gulf and beyond. Iran hit Duqm in Oman, a port specifically built to bypass Hormuz's risks. Before Jebel Ali, they struck Jebel Ali in Dubai, handles 60% of UAE imports, crippling Dubai's non-oil economy with drone hits. They attacked Mina Salman in Bahrain, home to the U.S. Fifth Fleet, exposing the military-commercial nexus. They hit Haifa in Israel, which manages vital energy imports. Iran is demonstrating that you cannot sink ships, but igniting ports wins the economic war. Ports are the real battleground. Patriots cannot protect Jebel Ali's cranes from drone swarms. Every Gulf exporter feels the premium, repricing the global tanker fleet overnight. The importers taking the biggest hit. These nations account for roughly 69% to 75% of all Hormuz crude flows. Japan relies on 75% of oil imports via the Strait, near 100% import dependent overall. Japanese tankers already turning back. South Korea gets 60% of crude through Hormuz. India sources 50% of crude imports, roughly 2.6 million barrels per day, from Gulf states, plus 60% of natural gas and LNG. Fuel prices will skyrocket. Rupee under pressure. GDP growth hit directly. China is the largest absolute buyer at 55% to 60% of crude imports via Strait, but has diversification through Russia pipelines. Still feels massive price pain, but absorbs better than the others. Iran's port strategy is textbook asymmetric warfare. You cannot protect every crane, every terminal, every tank with carrier groups. They are not trying to sink ships. They are igniting infrastructure that cannot be defended. This is economic warfare meeting energy warfare. Friday's video walked through gold, silver, oil spiking together. China ordered citizens to leave Tehran, $650 billion added to metals market cap. I said markets were pricing scenarios most will not discuss. Now the resistance case, because honesty matters. Weekend premiums capture directional trend, but tend to overstate the actual gap. Markets open in hours. Futures can gap, then fill. Strikes could de-escalate. Hormuz could stabilize if insurance recalculates. Physical premiums compress if paper markets slam lower Monday. Banks have coordinated this during geopolitical events before. However, Iran just said no red lines. Everything possible now. Officials confirmed airstrikes continue for days. Iran hit U.S. bases in 5 countries. Iran struck a carrier group with ballistic missiles. Israel stated regime change as explicit goal. Houthis resuming Red Sea attacks. This is sustained military operations with regime-ending objectives from both sides, while the world's most critical energy choke point freezes due to uninsurable risk. Underneath all of this, structural metals deficits did not change. 10 consecutive monthly green closes on silver, gold 7th straight record. Shanghai premium persistent at $12, now widening to $27 on Shenzhen physical silver. Industrial demand has not stopped. Solar EVs, AI data centers, 5G military defense, nuclear mine supply cannot keep pace. Central banks still buying gold at record rates. Silver lease rates spiking 6 days straight before this weekend. When Western markets open tonight, watch these things. 1. Gap size on gold and silver futures. 2. If Shanghai premium widens past $27 on silver or compresses. 3. Strike duration. Does this continue for days as stated, or does Iran hold back? 4. Whether Hormuz closures expand or stabilize. 5. How oil holds or gives back weekend gains. One more thing. Gold may lead the next move in precious metals given the safe haven flow we are seeing. Precious metals are likely to gap higher when markets open. We will see. IG weekend spot silver near $100, Kinesis silver, $100. Hyperliquid, 96. PXG gold, 5,400. These are not random numbers. These are physical-backed crypto markets showing you real-time price discovery while COMEX sleeps. When physical markets and tokenized metals trade 20 sambon above Friday's close on silver and 124 above on gold, that is your preview of where futures need to open, or the arbitrage becomes impossible to ignore. The data is clear. Physical markets traded all weekend and showed you where informed money values metals when futures cannot interfere. The Strait of Hormuz is functionally frozen, not headlines, actual insurance pricing, and tankers anchored in open water, and underneath all of it, structural deficits that were already breaking the system before any of this started. Physical buyers in Asia paying $120 for silver are not selling at a loss because Western banks want lower prices. This is not financial advice. This is financial warfare education. 3 assets matter now in this environment: gold, silver, oil. Subscribe to Geo Finance for real-time updates. I will be watching the gap. If significant data drops, another video comes fast. Invest with logic, not hype. Geo Finance out.